Keep buying. That's today's message, and that was actually last week's message as well. The market is continuing to move higher, and this week we actually had some weak economic data points. Didn't matter. So before we get into all of that, if you're finding this YouTube content to be of use, please give it a thumbs up. Please share the link. Also, please subscribe to my YouTube channel. I'm trying to reach as many traders as I can, and ultimately, you're going to be helping them by directing them to my channel. What happened this week? Well, we had ADP came out and we had a negative 32,000. So actual job losses in the private sector during the month of September. You would think that the market would sell off on that type of news, especially with the jobs report coming out. Didn't happen. The market sold off very briefly on the open, and then stack green candle, stack green candle, stack green candle, gap fill, new all-time high after that news, even after a government shutdown. So the government shutdown really doesn't matter right now. The market's been able to rally on that news. It knows that there's going to be a continuing resolution signed. Maybe it takes a week, maybe it takes 2 weeks, but on a longer term basis, it's really not going to matter. As far as the employment numbers, right now the focus is on interest rate cuts. The weaker the employment backdrop is, the more likely we are to see another rate cut or two. So today's job number didn't get published because the government is shut down. Well, it could have come in weak, but I don't think it really would have mattered. So if it came in weak, the Fed would be more inclined to cut interest rates once or twice more this year, and the market probably would have rallied on that news. If the jobs report came out better than feared, well, then our chances of a recession have gone down, and that probably would have sparked a rally as well. We can't ignore the technicals right now. And by all means, please watch the video that I posted on the mental aspects of trading, how to have a winning mindset. I posted that yesterday. I think that those tips are really going to help you because right now what we're seeing is weak fundamentals, and that's getting the headlines. That's what everybody is focused on. You can't look anywhere without seeing gloom and doom. Credit crisis coming. Market crash coming, stocks at all-time high, Warren Buffett bearish. I mean, all this kind of stuff. If you let that type of information influence you, then you're missing this entire rally. But if you look at the technicals, what they're telling us is that the market is going to continue to move higher. Like it or not, it's going higher. And what most traders are fearful of is that as soon as they embrace this rally, as soon as they get long, the rug is going to get pulled out from under them. So the way that these rallies typically end is before you see any type of big sell-off, you're going to see some volatility. You're going to see some long green and long red candles, and buyers and sellers are going to be battling it out. And you're going to see that in a horizontal trading range. Well, when we start to see that, then we're going to know that it's time to start reducing our swing exposure. Let's take a look at last week's trade. It was Tesla, T-S-L-A. I liked the stock pattern. I liked the technicals for Tesla. The stock had broken through horizontal resistance. It was compressing, and it had a gradual upward sloping trend line to it. So what we wanted to do was not to immediately buy the stock, but to distance ourselves from the action and to sell an out of the money bullish put spread. And so what we did in this particular instance, and I did get filled on the trade, so I know everyone was able to get filled on it. In fact, it closed right now where it was 90 cents bid offered at $1.10. We were trying to get $1 credit, and we were selling the October 17th, 400, 395 bullish put spread for $1 credit. Here's what I liked is I like this nice upward sloping trend line. It's a trading channel actually, and I like this gap higher. So this had me very bullish. Those gains were preserved, and now the stock has continued to see a series of higher lows. Well, why didn't you get more aggressive with this? Because the stock is still kind of choppy. Yes, it is moving higher. I think ultimately it will move higher, but for right now, let's distance ourselves from the action. Let's collect some put premium. Let's go way out of the money. all the way down to the 400 strike price. So we sold the 400, 395 bullish put spread for $1 credit. That expires before Tesla announces its earnings. And you can see how there was a big bearish engulfing candle and a big gap reversal actually yesterday as well. And then we had a little bit of follow through selling today, but the stock was able to finish off of its low. I still like this trade. I think it's going to perform well. So we're just simply trying to take advantage of time premium decay, and we're distancing ourselves from the action. Those are the types of swing trades that I like doing right now, especially on a longer term basis, because the market is extended and it's above its EMA 8 here. So this is where I start doing more passive types of longer term swing trades. And when we get that dip below the EMA 8, this is where I get a little bit more aggressive with my day trades and my short-term swing trades that might only last a day or two. Why? Why is there this divergence? Well, because when the market's up here and it's a little bit overextended on the upside, I know that we're either going to see a compression or we're going to see a pullback. Well, if I've got a compression or a pullback, I don't want to be buying call premium, because as soon as the market pulls back, those trades are going to lose money. But if I distance myself from the action and I sell out of the money naked puts on stocks that I'd like to buy, well, they're not going to be impacted very much because those stocks are strong and those puts are way out of the money, and any time that elapses is going to erode that position. So that's why I'm more passive up in here, and I will be up in here. So we'll be looking to sell some naked puts on a strong stock. But if I were in here, this is where I would be day trading, and those are the trades that I post in the chat room, because I know that once support is established, I should at least have a week's worth of nice, solid, steady price action in here. So that's how I would be playing it right now. We don't have any news coming out this week because we don't have any economic releases, but in 2 weeks, earnings season is upon us. So we're going to have some earnings releases, and we'll have some market volatility that we'll be able to gauge and see how well those earnings announcements are coming out. And hopefully the government shutdown will end. So we'll start getting some economic releases. Until then, no news is good news. And right now we have no news. No news, or a light news calendar, favors the current trend. And in this instance, that trend points higher. So that's really all I've got for you, except I want to show you a trade. And if I look at some of the stocks that are out there, now I'm going to go into a search on Option Stalker Pro, and you can see coin, nice breakout in the gap here. Yeah, coin has some nice little momentum, but it's also the type of stock that moves very rapidly based on what Bitcoin is doing. So this wouldn't be a favorite play of mine. QUBT, that's a nice looking stock, but you can see it's been pretty choppy. I have sold out of the money puts on this stock, but with the stock at $24, $25, I'd have to go down to the $18 strike price. I wouldn't be selling those right here. I need to have the stock pull back, and I need to be able to get a good amount of premium below a VWAP-E, then I would consider it. But up here, I'm not going to get much, if anything, for these puts. So that would not be of interest to me. On a day trading basis, RGTI, heck yeah. Look at this stock. This is a beautiful bullish flag. So there's your flagpole, little pullback, downward sloping trend line, breach to the upside, bounces off the EMA 8. Hello. That was a really nice stock that you could have traded this week. And we'll continue to go down the list, but a lot of these stocks are high flyers, and they have rallied too far, too fast, and they're a great distance away from any meaningful support. So selling out of the money, naked puts on these stocks is not going to work, because I'm not going to get the premium that I want. And I want to be able to sell those naked puts below a technical support level that's relatively close by, because I want to bring in enough premium to where I can generate an 8 or a 10% return. Here, I'm not going to be able to get that type of premium all the way down to AVWAP-E. So I've gone through the list and I've taken a look at a stock that I like. I like Rocket Lab. Why do I like that? Well, you can see that the stock has actually rallied quite nicely over the course of the last 4 months or so. After a big run like this, you can see that it's been in a horizontal compression. All right, well, what does that mean? That means that there have been some sellers, so there are some profit takers. Investors who bought the stock here and saw a rally like that are going to be locking in some profits. So there is supply. And until that supply gets worked off, the stock is going to be in a horizontal trading range. Eventually, the buyers that are looking at this as a long-term investment are going to nibble away and chew away at that supply until it's gone. And once it's gone, the stock is going to break out to the upside. And you can see how today we finally got that breakout through horizontal resistance. Well, does this mean that I'm going to go out and buy the stock? I could, especially if there's follow through Monday, Tuesday, Wednesday. I liked this price action, but I have an alternative. What if I sold out of the money puts all the way down here to the $48 strike price? That would be a really nice place to get long. So I did take a look at where these options are trading, and I'm going to take a quick look at where the October 17 puts are trading, and I'm going to look at that 47 strike price. There's not enough in there in October. I think I'm going to have to go out to maybe the October 31st timeline, and I'm looking at the next earnings announcement, which is on 11/12. So I want to make sure that the options expire before the 12th of November, because that's the earnings announcement, and we don't want to be anywhere near this stock at earnings. So right now, if I take a look at the $50 puts, and that is the October 31st, the Halloween expiration date. So the 50 puts, I can get $2.50 for those. They're $249 bid, offered at $262. So $250, yes, right here, right now. So what would I have to put up for that in terms of margin requirement? I like to hold half of the strike price in reserve because I have every intention of buying the stock. I have the money set aside for it. The exchange minimum margin requirement is going to be closer to 20% of that strike price, but I'm going to calculate my return based on if I had to buy that stock. Half of the strike price, $25, and I'm bringing in $2.50. $2.50 divided by $25, that is a 10% return in a month. You can multiply that by 12 and decide if you think this is the type of trade that you'd like to do. Now, by selling that $50 put, my actual net cost for the stock is not going to be $50. It's going to be $47.50 because I got that $2.50 credit. Well, where does $47.50 put me? All the way down to AVWAP-E, all the way down to the 50-day moving average, all the way down to this horizontal support where we've previously seen buyers. 10% return, relatively low risk, market continuing to grind higher and grind higher. No reason to be fearful, but if you're hesitant right now, and if you feel that we could see a dip in here, maybe it's related to the shutdown, maybe the market gets tired of the shutdown, it gets a little anxious, and we get a pullback. We know that we're above the EMA 8. We're expecting that, yes, we could have a little pullback maybe to AVWAP-Q or so. Okay, great. No sweat. This stock has shown us that it wants to move higher. It's just broken through horizontal resistance. We know there's a well-defined support level at what our price would be if we get assigned. And there's a good chance that this breakout is going to continue to move higher, and those puts are going to continue to lose their value. And we can buy them in way before option expiration. I've been doing this actually with a number of stocks every single week. I'm selling maybe 4 or 5 of these positions, And some of them have been on the quantum computer stocks, the AI stocks, and they've run up so much that I'm just buying back these puts for pennies and locking in the profits because I've already realized the maximum gain on the position. So I don't feel like I'm reaching on Rocket Labs. I feel like it's setting up very nicely. I feel like I'm able to sell those puts well below horizontal support in the 50-day moving average and AV-WIP. This is a really good trade. So if you like this kind of trade, and if you've been doing some of my previous suggestions, please give this a thumbs up, share this video with other traders that you know. Let's see how the week plays out. I don't think we're going to have a lot of market movement. I think we're just going to gradually float higher because there's no economic news to really stand in the way right now. Thanks so much for watching. Trade well. We'll see you soon. I will be doing a live event Wednesday with Harry, so watch for that. See how we trade live every day and take our 14-day free trial. I won't even ask you for a credit card. Dive into the action and trade alongside of us. Your downside is that you get some great trade ideas. Your upside is unlimited because you'll learn the skills that you need to be profitable. Check out OneOption.com and see for yourself.